Welcome back. It is now time for our ETF Spotlight. We're taking a look at the iShares China ETF, ticker MCHI, taking a tumble over the last month as investors continue to watch Chinese regulators crack down across sectors ranging from tech to financials. You can see the MCHI is down about 2% today. Ride-hailing firm Didi, just one of a host of Chinese names that are getting impacted by all of this, and all headed to the downside. We mentioned them before the break, but look at that. Full Truck Alliance, which was on this show not that long ago when they went public, down almost 20%. Kanjun, which I think I'm saying right, down about 10% as well. And David, it really speaks to, I think, the broadening regulatory crackdown we are seeing in China across its different regulatory bodies, and really speaks to how big potentially the risks are now for investors in some of these IPOs. You got to wonder what it does to the almost 36 Chinese names that are reportedly in the pipeline to go public here.
Yeah, I mean, Didi, that's a big story. Given this company went public in our markets last week, raised $4.5 billion at 14, and is now trading below 12. As a result of, according to the Wall Street Journal, of course, something that they potentially knew about, namely that Chinese regulators had already suggested to the company to delay its IPO while they did this review from a cybersecurity perspective. There's a lot of other questions, of course, as you might imagine. What are the Chinese really after? Do they want to try to diminish the flow of Chinese companies that are using our capital markets to go public? Or is it really simply about exercising control in a very significant way? But to your point, Morgan, whatever it may be, it certainly does at least show that there's a great deal of potential downside here in terms of the regulators, what they're willing to do. And one would imagine that if you were going to go public in our markets again as a Chinese company, you are going to have everything done across the board when it comes to well-documented approval from every regulator in China.
Every regulator in China. And don't forget all of this increasing scrutiny that's happening from American regulators on these Chinese companies as well, which I think is also part of the rub here, right? I mean, you're talking about national security implications, or at least the argument for national security implications, whether it's in China or, by the way, whether it's here in the U.S. as well. And data, as we know, is very much king, and how not only monetizable, but how sensitive some of that data can be certainly seems to be the focal point where Didi is concerned. But it has been a topic of debate for these companies that have come into this market, not only financially speaking as publicly traded entities, but also in terms of cracking into the U.S. market to sell wares over the last couple of years as well. So I have a feeling this is just going to continue to grow in terms of
we'll see. I mean, obviously, a year ago or so, not quite, Ant Financial was planning on coming public. Biggest IPO of all time, it would have been. And then the Chinese regulators came in and said, nope, you've got to change your business model. We haven't heard from Ant since, at least in terms of a public listing.
Shepard Smith here. Thanks for watching CNBC on YouTube.